What if I told you there's a secret financial weapon so powerful, Albert Einstein called it the eighth wonder of the world? Hey there, smart investors. Today, we're unlocking the mystery of compound interest, a concept that can seem a bit intimidating at first, but is actually super simple and incredibly powerful. In this video, we're going to demystify what compound interest is, how it works, and most importantly, how you can use it to build serious wealth, even if you're starting with just a few dollars. Get ready to have your mind blown. Before we get started, I want to share something exciting. I've come across a groundbreaking financial strategy that's been helping investors see remarkable growth. If you're curious about new ways to potentially boost your returns, take a look at the link in the description for more details. All right, let's get right into it. Compound interest is basically interest earning interest. It's like a snowball rolling down a hill. It starts small, but the more it rolls, the bigger and faster it grows. Here's the magic formula. A equals the future value of the investment or loan, including interest. P equals the principal investment amount, the initial deposit or loan amount. R equals the annual interest rate as a decimal. N equals the number of times that interest is compounded per year. T equals the number of years the money is invested or borrowed for. Sounds intimidating, right? Don't worry. Let's break it down with a simple example. Imagine you invest $1,000, that's your P, in an account that earns 5% interest per year. That's your R, or 0.05 as a decimal. If the interest is compounded annually, meaning once a year, so N equals 1, and you leave it there for 30 years, that's your T. Let's see what happens. A equals 1,000 times 1 plus 0.05 divided by 1 to the power of 1 times 30. A equals 1,000 0.05 to the power of 30. A equals 1,000 1.05 to the power of 30. A equals 1,000 times 4.32194A equals $4,321.94. So, after 30 years, your initial $1,000 investment would grow to approximately $4,321.94. That's the power of compound interest at work. Now, let's spice things up a bit. What if, instead of just letting that money sit there, you added a little bit more each month? Let's say you added $100 every month. That's $1,200 per year. The calculation becomes a little more complex, but there are plenty of online calculators that can do this for you. In this case, after 30 years, with that same 5% interest rate, your investment would grow to over $85,000. See how powerful that little extra contribution can be? That's the key to really unlocking the potential of compound interest. It's not just about the initial investment, it's about consistently adding to it over time. Okay, so we know that compound interest is amazing, but here's the problem: time. The longer you let your money compound, the greater the returns. This means that starting early is absolutely crucial. But what if you're not already a seasoned investor with decades to spare? What if you're just starting out? Or maybe you're a bit older and feel like you've missed the boat. Is it too late to harness the power of compound interest? Absolutely not. It's never too late to start. While time is definitely a major factor, there are other levers you can pull to maximize your returns, even if you're starting later in life. Let's talk about the most important one: rate of return. Your rate of return is the percentage your investments earn each year. So if you invest in stocks, bonds, or real estate that grow at an average of 8% per year, that's your rate of return. Now, this is where things get really interesting. To really understand this, we need to bring in the GOAT, the legendary investor himself, Warren Buffett. Warren Buffett is arguably the most successful investor of all time. He's built a multi-billion-dollar fortune through, you guessed it, compound interest. He started investing at a young age and has consistently compounded his returns over decades. Buffett's primary strategy is what he calls value investing. He looks for companies that are undervalued by the market, meaning their stock price is lower than what he believes they're actually worth. He then buys these stocks and holds them for the long term, allowing the power of compound interest to work its magic. Here's the thing that most people don't realize. Buffett doesn't go for flashy, high-risk investments. He invests in solid, reliable companies that he understands. That's the key. As Buffett always says, rule number 1, never lose money. Rule number 2, never forget rule number 1. Buffett also emphasizes the importance of patience and discipline. He doesn't panic when the market goes down. He sees it as an opportunity to buy more of those undervalued companies. As he says, be fearful when others are greedy, and greedy when others are fearful. Now, what's Buffett's secret weapon? Something that most people completely overlook? It's not some complex algorithm or insider information. It's reading. Buffett spends a huge chunk of his day reading company reports, financial news, and industry analysis. He believes that the more you know about a company, the better equipped you are to make informed investment decisions. Here's the mind-blowing part. Buffett credits much of his success to the knowledge he's gained from reading. He estimates that he spends around 80% of his day reading. That's right. The billionaire investor spends most of his time absorbing information. This illustrates just how important he values knowing the companies he invests in. I just sit in my office and read all day, Buffett has said, per CNBC. This is because he feels that the more he knows, the better informed his investment choices will be. While we can't all become Warren Buffett overnight, we can definitely learn from his approach. By focusing on value investing, being patient and disciplined, and consistently educating ourselves, we can increase our chances of achieving similar long-term success. So, how can you apply this to your own investment strategy? Start by doing your research. Understand the companies you're investing in. Look for solid, reliable businesses with long-term growth potential. Don't chase after get-rich-quick schemes. And most importantly, be patient. Compound interest takes time to work its magic. Are you ready for some real-world proof that this works? Let's look at a few other legendary investors and their wisdom on compound interest. Benjamin Graham, the father of value investing and Buffett's mentor, said, "Investment is most intelligent when it is most businesslike." He was a big advocate for investing in companies with a margin of safety. Peter Lynch, the legendary Fidelity Magellan fund manager, famously said, "Know what you own and know why you own it." He was a firm believer in investing in companies that you understand. John Templeton, a pioneer of global investing, once noted, "Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria." His success came from buying low and selling high. These quotes really highlight the principles of investing, knowing your companies and the market, but most importantly, long-term investing to build compound interest over time. So, what have we learned today? Compound interest is a powerful force that can help you build wealth over time. Starting early is ideal, but it's never too late to start. Focus on increasing your rate of return through value investing. Be patient and disciplined, and never stop learning. By following these principles, you can unlock the potential of compound interest and achieve your financial goals. Remember the importance of time, but also consistency. If you put in the work, compound interest can be one of the most beneficial things for you to gain over time. You won't regret it. Want more tips on building wealth and investing smarter? Click here to watch how to master your credit score.